Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock. With news, the US Fed looks more trapped in policy choices than it has for a long time. But first up today, the US-UK trade deal was announced to great fanfare overnight. But in fact, it isn't much. Rather, it is a small set of carve-outs from the previous base case. The whole thing is very underwhelming. But the equity markets liked it, even if the bond markets didn't. And the US dollar rose on the news. Perhaps the equity markets also see progress coming in tomorrow's Swiss meeting between China and US representatives. Meanwhile, US jobless claims fell last week and by a bit more than seasonal factors would have assumed, coming in right at the level expected by analysts. There are now 1.846 million people on these benefits, whereas a year ago there were 1.743 million on them, so a 5.9% rise since. And American labour productivity fell 0.8% in the March 2025 quarter as output decreased 0.3% and hours worked increased 0.6%. It is their first decrease in productivity since the volatile pandemic years and prior to that the first Trump presidency. Also not changing much were American inflation expectations, which isn't as sanguine as it sounds because they came in at April at the elevated 3.6% level they jumped to in March. However, household perceptions about their current financial situations deteriorated. In Malaysia, their central bank held its policy rate at 3% overnight, as was expected. They have low inflation, 1.4%, and good 4.4% economic expansion, but one that is fading a bit, and they are vulnerable to the tariff war. In the meantime, Malaysian industrial production is still expanding at a healthy clip. In Europe, German industrial production is on the comeback too, up 3% in March from February, and for the first time since May 2023, hardly lower than year-ago levels. Of course, this is data that predates the onset of the US tariff war. In England, their central bank cut its policy rate by 25 basis points to 4.25%, also as expected. It is their fourth rate cut since August 2023, when their rate reached 5.25% in the previous cycle. They currently have 2.6% inflation, slowly easing, and 1.4% economic expansion. With the Bank of England following the ECB down, along with Canada, soon Australia, and likely New Zealand, it does point out that the US Fed is now boxed in by US fiscal policy, basically unable to cut rates there because of the immediate risks to inflation. The US Treasury 10-year yield is now at 4.37%, up 10 basis points from this time yesterday. And the price of gold will start today at $3,303 an ounce, down $81 from yesterday. Oil prices are firmer today, up $1.50 at just under $60 a barrel in the US, while the international Brent price is now just under $63 a barrel. And the Kiwi dollar is now at 59.1 US cents, down 60 basis points from yesterday at this time, a full 1 cent lower than Wednesday. Against the Aussie, we're down 20 basis points at 92.3 Australian cents. Against the euro, we're unchanged at 52.6 euro cents. That all means our trade-weighted index starts today just on 67.6 and down 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.